Alex, take us back a year ago. What were we hearing from some of the Wall Street forecasters about 2023?
Yeah, so the overarching view going into 2023 was that a recession would be inevitable. Everyone was kind of game planning for that. And it's always very challenging to be a market forecaster on Wall Street. Anything can happen, but particularly over the past 2 years in this post-COVID economy that has really defied expectations and all traditional models that people have used in the past to make calls. And the three big calls going into 2023 were sell U.S. stocks amid the expectation of an economic downturn, buy bonds on the expectation that a recession would lead to a rebound in bonds from last year, and buy Chinese stocks as their economy opened up after COVID. That was expected to propel the nation's stocks, and of course none of those calls played out. When it comes to the equity market, the S&P 500 is now nearing a record. It's a little bit down today, but still pretty close after more than 20% gain this year. Bond yields are set to close the year roughly where they were at the end of last year. And then, of course, Chinese stocks experienced a rout this year amid a deepening real estate crisis and fears of deflation. So it's making life very awkward for those who sell their calls to investors around the world.
I've never seen the consensus as wrong as it was in 2023 is a great quote in your piece by Andrew Pease. He's over at Russell Investments. But to be fair, let's call out, unfortunately, Mike Wilson, who was a bit of a perma bear, really came out as on top for 2022, and that bearishness just didn't bode well for 2023. You call out some others at Bank of America who got it wrong in terms of the Treasury bond yield view, and Goldman getting the Chinese asset call wrong. Let's dwell on those who got it right. Anyone who called some of this bull market right.
Yeah, so some of the people who are kind of seen as ever optimistic, as perma-bulls, that's the term that you call them, actually came out vindicated this year, but they were wrong last year. So thanks Tom Lee over at Fundstrat, Binky Chadha over at Deutsche Bank, they went into the year expecting a big rebound in stocks. And what they said was basically the kind of route that we saw last year is usually followed by solid gains in the subsequent year. If you go back to history, very rarely have we had 2 consecutive years of double-digit losses in U.S. equities. The last time was in 2002, and it's only ever happened 5 times in history. So when I ask them what it is that everyone else got wrong, they say that usually we do get a rebound after what we saw last year, no ifs, ands, or buts. But then you ask some of the people who were wrong, they say that no one could have anticipated the AI frenzy that fueled stocks this year. They say that
weight loss drugs?
Exactly. There were a lot of factors that a lot of people couldn't call.
You know, it's in terms of the fixed income, I kind of call it a win year. I mean, compared to 2022 when double-digit declines, historic declines across all fixed income. This year, kind of mid-single-digit positive returns, not so bad. And the U.S. corporate high yield up 13%. I did not see that coming. So a little bit better performance here in fixed income.
Yeah, definitely. This fourth quarter rally kind of saved things from fixed income. It would have been the 3rd straight year of bond losses.
Absolutely.
When we are, therefore, dare we make any forecasts whatsoever, but set us up for 2024. What are, therefore, the learnings from 2023 and pushing us into the next year?
Yeah, so definitely it has been a year of reckoning on Wall Street. But interestingly, you've heard some headlines perhaps about some firms coming out and saying that they see the S&P rising to 5,000 next year or even topping that, a little bit more optimistic than they were going to last year. But the consensus view tracked by Bloomberg stands at about 4,800, which implies little to no gains from the level that we're at right now. So there's still some hesitation on Wall Street about kind of turning to a fully optimistic view. A lot of people say that we do need that landing. We do need some sort of downturn to happen before they turn, or we need some sort of big growth catalyst to spur stocks before they can change their outlook.